Okay, here you go. I went to write all this on the chart, but man, I had a lot of scribbling, so I'm just going to go ahead and make a quick video about it. Hopefully, I can do this in one take. The question was, why did I decide to enter the market right here and exit the market right here? So, first thing we need to do is we need to look at the big picture and ask ourselves, what's really going on here? I think we all can agree that the market is in a trend on the way up. Um, that makes you want to lean more towards a long position. Obviously, you never want to rule your other options out of a short position, but it's looking a little bit more bullish over the last couple of days, obviously, um, than trying to short a trend going up. So we want to start looking to take a long position when we're seeing a market move on the way up, obviously. So let's look at what's really going on here with this chart. We'll start back here in the history to determine over here in the future, where's a good place to enter this market. So the first thing that comes to my mind when I start looking at this through here in this zone, I see a lot of resistance here. So what happens with former resistance? Former resistance turns into support. Former support turns into resistance, and so forth. So keeping that in mind, I have a former resistance zone. Theoretically, should find some support in that zone. So what happened was it broke out of here, and it came all the way up to here, took off, and we've seen the sell-off, which was expected, It had a nice run over the last couple of days, so I'm trying to keep the whole big picture and then the frame here of what's going on in the market. So once we had our sell-off here, we see these two larger candles in comparison to the rest of these candles here, and let's judge the size of these candles since, obviously they're all hourly candles. This looks like a impulse sell, and it came down here and it hit right off of the cloud and it had a nice bounce. Okay, so once we had a nice bounce, what's our next candle coming through here? Okay, a little tiny bearish candle, but compared to this candle, it's insignificant. Then we seen another bullish candle, bullish engulfing candle of this candle. So now we've had these two big bullish candles. It had a retrace down and it found some support at 38.2, which was expected. It's a very, very, very strong Fibonacci level. Your 38.2 and your 618 are really strong. So it found its support and it came back up here. So at this point, we didn't make a higher high. So we're probably going to sit here and, be a little bit questionable about this market. Should I short this market at this point? Should I take a long position at this point? What's really going on here? So we've seen it hang out here around the 786, but what that tells me here is this reached the 786. So at the same time, it didn't make a higher high, but let's make the argument here that we took a Fibonacci, we swung from high to low, we found our bottom, and we had a bounce. We all can agree upon that. So this bounce came all the way up to the 786. So that's telling me that this is a pretty powerful bounce if it made a, 78.6 retracement of this swing high-low here. So it's got some momentum still left in it. Now, if this would have came up here to the 38.2 at this former support right off of that candle or that candle right there and got rejected, then I would have been more leaning towards this market was going to start heading back down. But this thing came all the way back up here to the 786. So I'm thinking, okay, well, swing high-low, 786, broke the 618, invalidated this pattern trend here if we broke above the 618 and started closing candles above it. So that invalidated this move here. So maybe we should start to, take into consideration a long opportunity because the market looks like it's gaining some strength and momentum back to itself. So let's move along a little bit farther here into the chart and get back into the zone because remember, we can't see any of this at the current time. Like none of this is here. The cloud was probably about right here, starting to pinch together, but hadn't yet crossed over. So looking at this here, I know it's only on an hourly, but we see a bullish cloud, and we expect some type of consolidation throughout a zone of a cloud. That's to be expected. So we want to look for some type of support and resistance in this area, if it's going to be a continuation pattern of the overall trend back up. So we had the 786 here, and we seen the sell-off, came down to the 50, came down to the 38.2, seen a doji candle, and then we seen the big sell-off. It didn't make a lower low, okay? It hit the bottom of this cloud again. So now, what's this candle do? This candle gets eaten all the way back up above this 38.2, forming as some type of support. So this is a powerful candle here. So this is showing us that the bulls are starting to regain control. They're buying still. They want to buy, okay? So then it came up here, hit the 50, hit the resistance, and it came back down here, and it fell. And what happened? We've seen another bullish candle. Look how it came back up here, but former support now turned into a little bit of resistance at this point, okay? So these are hourly candles. So now we had another powerful candle here, a powerful candle here, showing they're eating this up still. We're in the cloud. It's considered a consolidation zone. The cloud is green, still considered bullish, okay? So what do we have down here now? We had former resistance has turned into support, okay? So effectively, we have the bottom of the cloud here and our low here. So what we're trying to do is we're trying to make a trade off an educated decision, and we're trying to minimize our risk as much as possible, okay? So by entering the market off of this 236 Fibonacci level, which is former resistance, now turns support theoretically, we have multiple options for risk management. First, we can run a stop underneath the cloud support, or we can run a stop below this last low here. So what does that give us risk management wise? We're going to basically risk somewhere around 1% plus fees off of this trade here, and we have two levels of support that are pretty close to each other. So that gives us a really good option here to trade off of and not really risk a whole bunch. Because obviously at the time, this market just could keep tumbling down, stop you out. And it is what it is. You're going to have to some type of risk profile here. So let's go back to this candle where it actually entered off of this Fibonacci. It came up here, had a powerful candle, hit the resistance, came back down, had a hit the buy order after these two powerful candles. Came back up here. It never really made a low here. Traveled up, broke out of the cloud, found the 50 resistance. Okay, so we're still pretty safe at this point. It's not like we just want to dump our order and all hell's going to break loose. Feeling pretty confident that we achieved a decent risk profile here. So the market comes back down here and it hits basically where we bought originally. Okay, we're still at break even, we'll go for the gold. We never really seen another big wick down like that. This candle got eaten back up again to around the 38.2. So we're starting to show more strength. Each one of these is showing more strength, more strength, more strength, more strength, more strength. Okay? So then the market starts to travel up, expected to hit some type of resistance, and it breaks out of the cloud. Okay, so as soon as it broke out of the cloud, that opens up our options here. Multiple reasons. We've cleared the 618 again. Okay, so it came up here above the 618. We're above the cloud again. This would be a good opportunity to take your stop, and depending on your risk tolerance, you could either go off of this last low. You could take your stop and run it off of the Fibonacci if you believe that's the support, or you could run it up off of this 38.2 Fibonacci that comes in here and lines up right along with this cloud. So now you've taken your trade, you have a decent risk profile, and you've now took a little bit of profit, nothing to, call mom and run up out of the basement or, tell her anything, and be all excited. But, you got a little something in your pocket here and you've covered your fees. So what do we got on that? I'm taking it off of here, right about here. So we're, a little bit profit covered our fees. Cool, just like I expected. So now the cloud is broken out of, and we've seen it come up here. It hits the 786 again. So we expect a little bit of resistance here, but nothing really to panic over, because we had some resistance throughout this zone, and we never really closed any good candles above this, No. So this is when we're starting to have a little bit of a risk. So we're just like, all right, well, let's pull in a little bit of profit here and move this up below this 50. Now that we've got up into this zone, it comes down here and we're watching our trade form a resistance through here, form a resistance, now form a resistance. What happens? Form a resistance turns into a little bit of support. So boom, we got our support. Pushes it back up, still a pretty strong hammer candle here, keeps on going, made another high. Awesome, cool, man. Our trade's working out for us, So at this point, it's starting to move up. It would be probably a good opportunity to move your stop up another level here below the 618 and lock in some more profits once we get up here. And it breaks the new high. So, okay, cool. We got a new high. Now we need to start thinking, all right, should we exit our trade? Should we tighten our stop up? What are our options here? We got to keep being fluid and keep thinking through this market here. Because this is all happening live, and you got to react live to this. It's not as easy as going back through the history like I'm doing right now and just talking about it. So now we got our stop here. We've locked in. Sorry if I got quiet for a second. We've locked in about 1.6 to 1.7% profit. So that definitely covered our fees. Got 1% in our pocket. We're feeling pretty good about ourselves. Okay. So the market progressed up here, hit this. All right, 1414 rejection. Come back down. The candle still closed right around the 272. So we're looking and we're like, all right, what are we going to do here? That's the first thing we're thinking. What's going on? Is this thing going to continue on up? Is this thing going to dump? We've seen this time and time again. They always pump these things up and then dump them at the end of the trend. So this should not come to surprise to any trader who's been in this market more than probably 30 days. It's not like it's going to be a big surprise to see this dump. So you got to be expecting something like that on this impulse move up. So when it came up here and it started approaching this 1272, I flipped over and I was hitting the Ether chart, Ether USD, the Litecoin, and I said to myself, okay, Ethereum didn't make a higher high in the US dollar pair, but Bitcoin made a higher high in the US dollar pair. Then I went over to Litecoin. I said, it's the same thing. So overall, in the huge grand scale of things, the market itself didn't create a higher high, yet Bitcoin made this impulse move up and made a higher high. So then we approached into the next hourly candle. What do we see here? This candle right here shows a spinning top. So keep in mind, none of the other pairs really made a higher high. I mean, obviously I didn't check them all, but the major higher volume pairs, that I looked at didn't. So I'm keeping this in the back of my head. I'm like, okay, well, this spinning top here, no higher highs on the rest of the, overall market. This telling me a lot of indecision here. A lot of indecision. Then I seen it push up here, and it's bouncing around. Remember, this candle didn't close looking like this, but it was sitting there as a spinning top for a minute. Let me get that off here for you, sorry. So we had the spinning top just sitting there for a minute, and it just couldn't break above that resistance. We've seen the down pressure, we've seen some even up pressure, but a lot of indecision. At this point is when it started to come back up here and break above that is when I took this stop and I ran it real tight on this fib. I don't think it was on it, but I think it was a hair below it. I said, I just wanted it to hit my stop and, close me out of the position. That way I took that human interaction out of it. I didn't want to have that feeling of, oh, should I sell or should I not sell, or what should I do here? I made the decision and I committed to it. So there's so many indications, and basically that is how to set up a trade correctly and some things you can look for. I'm sure there's some other things that went through my mind, and obviously, because this was yesterday sometime when I took this trade, I believe. I think it was yesterday. Or was it this morning? I don't know. It was a while ago. It was like hours and hours and hours ago. So, I'm sure I didn't go through everything here, but the whole point of this was I kind of wanted to give you guys an idea of the thought process and what's going through my mind here, and how to go through some risk management and safely execute a trade. So hopefully you got a couple tips out of this or some benefits. Like I said, I probably didn't cover it all, but that's what I got for you right now. So I hope you enjoyed it and hope you picked something up off of it.